In this video, I'm going to showcase an awesome indicator that you can use to identify not only the trend of the market, but also the strength of the trend. To add this indicator to your chart, you want to go to TradingView, and then here, load any trading security that you like in any time frame, and then click on Indicators. Type in Trend Strength Signals, and it's going to be this one by AlgoAlpha. Now, the Trend Strength Signals Indicator by AlgoAlpha is a versatile tool designed to enhance your trading by providing clear visual cues and customizable parameters to identify these trends and assess the strength of the trends. Let's go over what this indicator is made of. Now, as you can see, we have this trend cloud that traverses our chart. This is going to be used to track the trend of the market. Whenever the price is above this cloud, that indicates a bullish trend. Conversely, whenever the price is under this cloud, that indicates the opposite of a bullish trend, which is a bearish trend. However, if any of these candles happens to close inside this cloud, that indicates a non-trending or consolidating market. And these are areas where we're not going to be looking to take any positions. Next, we have the bar colors. As you can see, this indicator changes the color of our candles to reflect the trend. Green represents an upward trend, red represents a downward trend, and then white is for neutral or non-trending markets. These green and red arrows indicate transitions between bullish and bearish trends, which means you can take a long position in areas where there is a green upward arrow and short positions in areas where there is a red downward arrow. Now, if you look closely on this chart, you will see these red and green X labels. Well, these indicate take profit signals, and they're going to be used to show you when to exit your positions. So for example, if you were to take a long position here, you want to exit your position right on this X label. And if you were to take a short position, then you would want to exit your position right on this X label. Now, if we look to the right of the chart, well, we're going to see this vertical bar. This is called the trend strength gauge, and it's going to be used to visualize the strength of the trend. Whenever this trend is bullish, like here, well, the gauge is going to be colored green at the top and white at the bottom. So it's basically a gradient of white to green. And then there is this tiny arrow right here that indicates the strength of the trend. So for example, if we go down here where the bullish trend was just beginning, you can see that the arrow was actually pointing all the way down here, which means this was a weak or a moderate bullish trend. But if we let the market play out, then the trend is going to get stronger and stronger, and this arrow is going to keep going up until it eventually gets outside of the gauge. This is the maximum strength any trend can have. And when using this indicator to trade, you would want this arrow to be as high as possible to indicate the strongest possible trend. So you can only take trades as long as this arrow is pointing at the very top of this gauge. But anything lower than here, like if it were to be somewhere here or at the middle, then that would be considered a weak trend. And we're not going to be looking to take any positions. Now, if the trend is bearish, well, the gauge is going to be colored red at the top and then white at the bottom. As the strength of the trend increases, the arrow is going to go up and up to represent the increasing strength of the trend until it eventually goes so high that it gets outside of the gauge. That is the strongest any bearish trend can be. And these are going to be the instances where we want to be taking short positions. But if you also get a trade where the pointer is as close to the top as possible, so maybe somewhere here, that would also be an okay trade. Anything lower than here would give you a risky trade. Now, if you look at this trend cloud, you will realize that it is also a gradient. So in one area, it could get darker and darker, but in other areas, it gets lighter and lighter. So the lighter it is, the stronger the trend. So like here, we can see that it is gray, but the lightest shade of gray. If we do a bar replay to this area, then you will realize that the trend was super strong as indicated by the trend gauge. As you can see, this arrow was blown outside of the vertical bar. But if we go to a darker gray area like here, you can see that the trend was bearish, but indicated as a super weak bearish trend. So when using this indicator to trade, you would want this trend cloud to be as light gray as possible, and also for this arrow to be as close to the top as possible. That is going to indicate that whatever trend you're trading in is strong enough to push the price in the direction of your trade. It's an awesome indicator, and I can't wait to tell you guys how you can use it to trade. But before we do that, let's talk about the Forex broker called HenkoTrade. I've been using HenkoTrade for quite some time. As you can see here, this is my live account on HenkoTrade's all-new trading platform called HenkoX. This is actually a new trading platform that they launched recently. It has improved functionality, fast execution, and overall better user interface. The reason why I love HenkoTrade so much is because of their low commissions and spreads. For those of us who love high leverage, well, HenkoTrade offers a maximum leverage of 1 to 500. If all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, giving you a total of $1,000 to trade with. To access the bonus as well as all the other perks, sign up to HenkoTrade using the link in the video description. Now, back to the video. Now, before we go over how we can use this indicator to trade, let's access the settings of it and see how customizable it can be. As you can see, we have the period. This is the main indicator length. Now, the standard deviation is going to be the number that determines what crossovers or cross-unders that are going to trigger the take profit signals. A higher number will make our take profit levels less sensitive. However, we're not going to be using this number, so we're not going to change it. Now, the gauge size is the resolution of the trend strength gauge. If we make it bigger, you can see that it gets bigger. If we make it smaller, then it's going to get smaller. For a balance of both, let's stick with 25. And then here we can change the colors. I want to change the up color to a better shade of green, and then for the down color, I'm going to go with a better shade of red. I also want to change the length to 34. After that, click OK. Now, this is just a trend indicator, which means we can't use it all by itself to take positions. So let's add an extra indicator. On the indicator search tab, you want to type in HHLL, and it's going to be this one. Double click on it so we can change some settings. Disable the Show Fractals option. Head over to the Style tab, and then here you want to disable the first two options. And then down here, you want to disable the lower high and the higher low options. After that, click OK. So this new indicator we just added prints these higher high and lower low levels on the chart. And this is how we're going to be using these two to trade. Remember, this is not a trading strategy. So don't go and do a backtesting of it with the expectation of using it to make millions of dollars over the next 2 months. I'm just going to be using this to showcase an example of how you can use the trend strength indicator to take positions with your existing strategy. So if you were to take a long trade, the first condition would be to ensure that the market is in a bullish trend. For that, you just want to make sure that the price is trading above this trend cloud and that these candles are colored green, at least the majority of the candles, like here. Now, condition number 2 is you want to identify the most recent higher high level and then put a horizontal line right there so we can track it to the right. And then you want the price to break and close above that higher high level. So we're going to wait for the market to play out and see if a breakout is going to happen. And this is the breakout. Now here comes the most interesting part of this strategy. Pay attention, ladies and gentlemen. Now, you see, during this bullish breakout, we need this bullish trend to be as strong as possible. To ensure that it's as strong as possible, we're gonna be looking at this trend strength gauge. We need this pointer to be pointing as high as possible or to even go outside of the gauge, like right here. This indicates that this trend is super strong and it increases the probability of this trade becoming profitable. Once we have these conditions met, we take a long trade here. The stop loss is going to go right under the most recent swing low. For the take profit, it's going to be at 1.5 times the risk. If we let the trade run, we can see that it was profitable. Now, to take a short position, of course, we're gonna do the opposite. So first, we need to identify that the price is in a bearish trend. To do that, we're gonna make sure that these candles are under the gray trend cloud. This indicates a bearish trend. Now, once we have the bearish trend, we need to identify a lower low level marked as LL by this indicator. We wanna extend it to the right so we can track it. And then we need the price to break and close under this level. This is gonna be our trigger for taking a short position. Now, an important point to remember is that during this breakout, basically on this candle, we want this trend to be as strong as possible. To do that, we just need this trend strength gauge to be colored red and this arrow to be pointed as high as possible. As you can see, in this particular trade example, it was actually so high that it was outside of the bar. This is what we're looking for. We take a short position here. The stop loss goes right above the most recent swing high. The take profit is gonna be 1.5 times the risk. We let the trade run, and it was profitable. Ladies and gentlemen, this is a super promising strategy, but it doesn't mean that it's gonna win 100% of all the trades taken. Losses are always gonna be a part of the journey to profitability. Go ahead and combine this with your existing strategy, or even add some price action, smart money, or ICT concepts to see if you can make it better. If you find a way to make it better, let us know in the comment section below. Well, that's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.